This is Matt Simpson from StoneX and Forex.com, and today I want to discuss why I think the dollar index is looking for a last hurrah higher before momentum turns and potentially sees it breaks into cycle lows next year. Now, starting on the daily chart, we've got a pretty decent trend from the September low, nice higher highs and higher lows. We've seen an acceleration away from the 200-day average yesterday following hawkish FOMC minutes, which is because most members pushed back against a December cut. We also found out that BLS have cancelled October's NFP figures, and they will release the November figures on December the 16th, which is after the Fed December meeting. So there were already low hopes of a December cut, but that pretty much kills it because the Fed can't really make policy without key data such as NFP. So that's pushed expectations for a cut further back into Q1 2026, and that's now seen the dollar bid. So I think the risks for the dollar are higher over the near term. I think we'll probably be seeing continuation of this trend, potentially move up to 101, which is a nice round number, and it also sits at that May high. However, whether it can go higher or not depends on incoming data, of course, but ultimately what I'm looking for is a bearish reversal after this last leg higher. You'll see these letters I've drawn, A, B, C. I believe this to be a corrective move against a bigger bearish trend. Also keep in mind that as we get to December is historically quite a bearish month for the dollar index. On average, over the last 4 decades, it's averaged minus 0.8% in December with a median of minus 0.69. It's also got a miss rate, that is, it closes down in December 63.4% of the time. So that's a pretty decent combination of bearish hit rates alongside bearish average and median returns. Also keep in mind, of course, that Donald Trump is really seeking to get Jerome Powell fired because he knows that the Fed don't want to cut rates. So as we get into next year, the pressure on the Fed to cut rates will become immense. Back to the charts though, let's take a look at the wider or the higher time frames just to get some perspective as to why I think this is a false move higher on the dollar. Back to 2011 to the 2022 high was a longer term bullish trend, but we saw this very sharp reversal. There's not really a reversal that sharp throughout this entire rally. We then had a very, very choppy price action, which to me is usually a pretty good indication of a corrective move. So that means this supposed rally is actually a correction. This is the impulsive move. This is the correction. And what happened in January this year, we had a lower high and an impulsive move lower. So I really do think that is a significant cycle high on the dollar. This is corrective, and we're now seeing an impulsive move lower. But of course, prices are retracing higher against this move. And that is why I'm essentially looking for the end of an ABC move, which could be around 101, potentially around 102 as we get into next year before we get the true reversal and potentially break into new lows. Anyway, if this is useful, wish you best of luck with your trading.